ICT 9:30 strategy till 11 o'clock. So I feel like most people get the time wrong when looking at the time and price, even though I think he was very specific about the time, right? It's 9:30 till 11 a.m. for the optimal trade entry mixed with the fair value gap. Now I'm trying here to simplify the things for those who are new to the strategy, trying to get the strategy so that we don't prolong the process. Today is Tuesday. We took a trade today and we did have a loss, and I thought to myself, you know what, let me just grab the camera and talk about my mistake. So the time for the strategy, guys, right? It's not 9. It's not 9:30, right? But you want to open your laptop or, excuse me, your desk, to be on your desk at 9:45 a.m. That is New York time. It would be 2 o'clock, right? So from 2 o'clock, I'm looking for a trade, okay? So 9 a.m. So what you want to do is to go to your right of your trading view and you look for New York, right? And then you click onto that and then you will find New York, right? Which is right there. I ticked on New York. So you want to set your chart to New York. Open your laptop at 9:30 or 9:45, right? Looking for the trade, okay? So I'm going to draw something for you now to simplify this before we move on to the chart, all right? So we want the market to do something like this. Give us a high, right? Between 9:30 and 9:45. You're not trading that time. You are on your chart looking for an opportunity, okay? So we would like for the market to give us a high, give us a nice low, and give us another high like that. So in simple terms, we're looking for the market to give us a high, a higher low, and a higher high, okay? Now, when you see something like that, where are you waiting? You are waiting over here, okay? And then you would draw your line for your liquidity over there. And then we are anticipating price to come to that level. If price gets too excited, it can push all the way down, taking you out. That's why I draw the liquidity zone right there. So I will show you where to put your stop loss. We'll sit over here, wait over there, push price up, right? So you will take the trade at 10. The time is very important in Forex. Time is very, very important. Time is equal price. So you need to look at the time, then you trade. That's why I'm giving you the time first, and then I'll give you the price, okay? So you look at the time at 10:15. You would take the trade till 11 o'clock, okay? So this is what you're looking for. One price to push up, one price to push down, push up, come back down to your fair value gap, and then give us an optimal trade entry. Now, let's see what happens today, right? Based on what I just showed you now. So when we come to our price now, come to the charts, we're seeing very nice, clear push to the downside, okay? Because there is a high, there is a low here. We have another high coming back to the second candle of the fair value gap, which I taught you guys last week. We have a push down, we have another push up, we have a push down, we have another push up, Okay. Now, in this area, okay, price came at 10. Okay. I want to use today's example because I think I was also taken out today, as I said in the beginning of the video. Okay. So what I was looking at is that area right there. Okay. So that's the 4-hour area. Okay. Price pushed down to the 4-hour area. Okay. So now the time is 10 o'clock. No, 10:45. You're looking at here. There's time here. These are tools, trading tools we use to analyze. Okay. And then this is our time right here. So we had that push down, and I'm thinking, okay, if we can just come back to that area, if we can just push to that area, then we can have a nice push down and a nice push up. Now, my mistake is I did not wait for price to come down, as I am telling you now, okay? Because sometimes we get to be so confident, and especially if we had a beautiful month, you know, we made about 22% this month. So sometimes you think you feel invisible. So that's why sometimes I don't trade when I had a beautiful month, because I know I'm about to take another big loss. So that's what happened, right? So I'm trying to show you something here, okay? So we want to see that a high, as I said, retracement and a push up. So the entry was supposed to be there. Look at the time, not the price. Look at the time, okay? Time there is 25 past 10. I entered at 10 o'clock. And that is why I was taken out, because what price is going to do is going to do something like this. Okay? Because it will first come to the second candle, the fair value gap. That would be your retracement, right? And then when you wait on this candle, this is the candle they will print at 10 or 9:45. That's why I'm saying 9:45, 9:30, you need to look at price. You're not trading, you are looking at the price. This happens every day, right? But if it does not happen every day, it's okay. What we do is we look for a next opportunity. So this area, 9:45, we had a nice push to where? To the fair value gap. So I'm telling you, my mistake was I did not wait for a retracement, which is of that candle. Okay. If we had waited for that candle, would we use the order block? Price push up at 10, coming down at 25 past. That's the entry push up. Now, the downside to the strategy would be, I think it always give you 1:2. I've tested this for a few months, and I've never seen it pushing to 1:4, 1:3, because of, I think it's a correction. So what price wants to do, it wants to take people that were selling over here, and then it will come over there, and then it will push up, push back down. So stop loss below the previous low that was printed by price at 20 past. So if you were to enter here, your stop loss tool could be here. Let me use the tool. Could be there, or stop loss could be there. Then you can target those highs. Now this happens every day, as I'm telling you. You see, it's 2%, nothing close to 3% at all, because what price is going to do is it's going to push up, come back down to your entry, right? So what you want to do is you want to wait. Okay, let me just rewind this, or repeat this rather. Okay, so if we were open there, so you want to wait for price at 8, 9. You want to see price pushing all the way down. This is a buying optimal trade entry. It's not a selling optimal entry. I will show you a sell optimal trade entry, but not today. So today I'm showing you a buy optimal entry, which takes place at 10:15 till 11. So you want to see a price pushing down, an aggressive push to the downside, not just going down one candle, an aggressive push to the downside. you want to put your box on a recent fair value gap, because that is where we'll have a retracement. The retracement is the opportunity to get in. So if we have an opportunity here, we place a box there, we have a retracement, we'll come back down, and then you place your stop loss below the arm of that area or below the previous low. And then you were to look at your buys. But if you did not have a retracement, that is not a trade to get in, I'm telling you, because you will get taken out. That was 10 pip stop. I only use 10 pip or 11 pip stop. I do not use 3 pip stops or 5 pip stop. That is a bit risky. Okay, so you target the highs of that area and you will be good to go. So you're looking at 2%. If your stop is a bit too low or too small, then you're looking at nice 5%, but it never goes beyond that. If your stop loss is 10 pips to 15 pips, it will be 2% for the trade. But this method, it works every New York session. I don't like it for London. I've never even tried it for London because he uses it for New York session. So I've always used it for New York session as well. So you should look into the market and see if the market will present these opportunities. Now, this is not something that you look at today and you just try it tomorrow. You need to work on it. You need to push yourself and to learn price. Look at the time first. But remember the times, okay? These are the times, okay? You in your desk at 9:45. You can start at 9:30 to 9:45, and then 10:15 to 11 o'clock, you're looking at the trade. So 10:15, we're looking at an entry. 9:30, we're looking at the chart. We want to see an aggressive push to the downside for those buys. We want to see price pushing up to take us to the recent fair value gap and then push aggressively down to the order block, or in this case, it pushed down to the fair value gap over here. We always use the half of the candle. If you look at my previous videos, you can see that I always use the half of the candle, and then you can push price to the upside. So your entry is right over here. So your entry is there at 10:15, right there, 10:10 at this point. 10:10 to 10:15 is an entry, and then you have that nice push to the previous high of that arm, okay? And then you'll be good to go. Thank you so much for watching. Hope to see you again in the channel. Cheers.